Everybody, welcome aboard. Great to be here. Thanks for having me on, David. I appreciate it. I have a number of different things that I look at during the day. One of them is never news. I watch Vegas Sports Information Network all day because to me, as a 47-year trader, a floor trader for 30 of those years, everything that I need to know is in these charts here. And what you're looking at right now is my day trading stuff that I do. And I had just shorted gold while Vince was talking. I don't know if it's going to work or not, but what I'm always looking for is a big volume spike and a market that continues to go in one direction. In this case, it went up, and then I flip over to a 1 minute. I use two time frames. In this case, I'm using 4 minutes and 1 minute. And when the 1 minute turned over, was my time to short the market. So that's in gold. But what I'm always watching is for action in the market. And I think Vince said it pretty well. It's a good day to go play golf because there's very little action in the markets overall right now. We're kind of just whipping around back and forth with really no volume. There seems to be very little emotion in the market right now. And as a trader, if you're a trader, you like a lot of emotion in the market because remember one thing, we are in competition against others. Trading is a competitive business. But when I look at the overall chart, and it doesn't matter what time frame you're using, because I'm going to show you more than one. But in this case, markets work in a couple of different phases. The first phase, and where the markets spend the bulk of their time, is always in consolidation. So you're looking at the Dow. We saw a series of double tops and double bottoms. We know for a fact that at some point the markets are going to break out of consolidation. We don't know which way, but we do know they're going to break out. So in this case, the Dow on a short time frame broke to the downside, and we're now finding support. So to complete this cycle here, we're looking for a blow off to the downside where price and time become meaningless and the sellers just show up and they just panic out, in which case would be a buy signal to us. In the case of gold back over here, this was a straight up move that became overbought, was on volume, which gave an indication to sell. And this is what I do every single day when I'm looking at the market. I'm trying to identify the phase of the market. And if we just look at each individual market, here's the Russell, consolidation, okay, series of double tops and double bottoms, break to the downside. Okay, the NASDAQ is now in consolidation right now. Okay, on this short time frame, the crude oil is in consolidation now. A couple of these markets, it's getting late in the day. Crude is getting late in the day. Gold is getting late in the day to trade. GLD over the next month, please. If you ask me, I think it's much lower. Okay, and I'm not negative gold. I am a big believer in gold. I am an owner of physical metals. Okay, right now I am short gold futures, but I'll explain the trade that I have on. To me, gold is way too overbought. We're probably about 6 or 7 standard deviations from the mean. The 200-day moving average is in actual physical gold or the gold futures is around 2,700. Okay. In fact, in the 200-day moving average in GLD is 250. I expect a pullback, maybe not to 250, but I expect a pretty severe pullback. Now, there's many ways to play that. And certainly I'm not recommending that you sell your physical gold or you get out or you get short gold. But from a trading standpoint, I'm short gold, but I am short it in a very unique way. Okay. On a day trade, I'm short it right now as I put this trade on, as I told you right before we got here. Okay. And I'm in it still. Okay. From a longer term perspective, I don't want to just say, hey, I think gold is going down. I have every reason in the world to believe it's going lower, but I'm not going to just take a naked position. So what I did in the position that I have on is I'm short six gold futures, okay, and I'm long 10 calls, okay. So I have a 5-by-3 ratio, which is basically a neutral trade when you put it on. It can make money. If I'm wrong and gold explodes to the upside, okay, then I can make money on the upside, even with my short bias. but I will make the most amount of money if gold breaks from here. Bubba, short gold. Are you then expecting a rally during this earnings season? I'm expecting a pretty ugly market in general all the way around. I'm expecting a pretty big collapse in the equities. I think we're going to get one more what we like to call a rip your face off rally, like we saw last Wednesday. You saw the Nasdaq up 12%. I think there's one more of these rallies coming. I don't think we're going back past the 200-day moving average. I think that there's going to be a lot of pain in this market. I think we've had too much nonsense for too long, and I think we're in a recession. I mean, that's my opinion, that we're in a recession. Now, again, it doesn't affect whether I'll go long or short. I will go long or short based on what the chart is telling me. Again, I happen to have been long for the rally last week. Why did I choose a 5-by-3 ratio gold hedge? Well, it's not really a hedge, it's a position. But if you do the math, okay, the futures are an underlying security is 100 deltas. Okay. So if I'm short 6, that's 600 deltas. Okay. And if I'm long 5, and if I'm long 10 options, okay, at 50 deltas, that's 500. So I have a slight bias to the downside, but the options will be at 50 delta when I put them on. They have a potential of going to 100. So that can take me up to 500 delta versus a short 300 delta. It would actually make me net long if we got a big move to the upside. So basically the position is meant to trade in and out of, okay, by using that ratio. That was my favorite ratio on the floor trade because it allows me to take a position and benefit heavily on either side, but especially if I'm right and it goes down. And I do believe, again, as I look at this chart, we are dramatically overbought and have been so. Remember, you can stay overbought for an extended period of time, okay? But again, if you go back to what we talked about, our phases of the market, you can see a lot of this is drawn in because every Monday night when I do a live call for members, I don't change the numbers. We continue to go walk through this, but you can see consolidation, breakout to a trend, consolidation, breakout once again. And then we finally got what I call the blow-off trade, which is what was the indication to finally get short again and look for it to come lower. But that pattern will appear whether you're looking at equities or whether you're looking at stocks. It doesn't really matter. I think what you have to learn as a person who trades is not to worry about the news. The news is you're going to be too late to trade the news. What the ideal part of trading is to learn how to read the overall chart. And as you look at any stock, I know Vince mentioned Apple, okay? For me, Apple has nothing to do right now. We're right in the middle of the range, okay? It certainly has room to run up to the 200-day moving average again, but I think overall it'll probably go lower. But at this point in time, I don't see an edge. I'm using here the Bollinger Bands because all Bollinger Bands are a mathematical model of 2 standard deviations up and down. Now they change obviously the width based on the math, but I think that when you're in the middle of the range, you're picking a side, you're guessing which way you think it'll go. I think the bias is Apple would rally up to, let's say 220, 218. I would be a seller there. But today, I have no position to look at. Amazon, okay, again, is also stuck in the middle of a range right now. I have no real reason to play it. We did buy it last week for a trade. It did bounce. We're out. Now we're waiting to watch once again. Again, you have to try to find the top edge of probability. Now, the one trade that I did this morning with a group, and I'll just show it to you, and I'll show you why, was on Zoom. I shorted Zoom today, okay? Why? Because we're bumping up against the 200-day moving average. To me, this is pretty solid resistance right here. So to me, I'm willing to take that risk. I think the odds and the probabilities are far in my favor that Zoom is going to fall based on the prevailing trend is down anyways, okay? So that was a trade I took, and I also sold some call spreads in Nugget today, okay, based on the same principle of gold. Nugget is a ETF miner that is well up above and well overbought. I'm not always going to be right, but I will assure you that if you trade like this, you'll always be on the correct side of probability. Does that answer your question? I hope. Nope. But again, if I go back to the shorter time frame first, so if we're looking for action, there isn't much action. Okay, we need to see a little bit more speed to the market. So this becomes really not much to do. But when I am trading this, and I do this every morning with my members, is I'm looking at the 4 minutes for to trigger a trade, and then to actually make the trade, I'm going to flip to a secondary time frame, which is a shorter time frame, which will then tell me that it's either time to buy or sell. Okay. And again, this was my trigger to sell in gold right here. Okay. And we're seeing here, and I will do no worse than break even on this trade. I'm going to try to let it run, but it is a little bit late in the day, as even though there's no more pits and no more floors, the markets still trade pretty much to what the floor hours used to be. But as I go and look, and if I go back through some of the stocks that I look at, okay, I'm going to look at, let's say, coin, for example. Once again, coin is right at the mean. So where's my edge to trade here? It certainly looks like it's trying to trend lower, but it's a lot closer to oversold than overbought. But I have no interest right now in trading coin. Crowd, I have an interest in potentially shorting crowd right about here. I'd like to see if it can pop up to 400. I think that's a better level to sell, and I am alerting myself at 400. But again, it would be overbought, and I would be looking to do a number of different things. And again, how you trade is up to you. You can short the stock if that is your choice. You can create a short position, buying an option, or you can create a spread. Myself personally, I will sell a deep in the money call spread in crowd when I make the trade. I'm not doing it now, but when I make it, the trade that I will make will probably be for next week. This is a short week, right? We have no Friday this week with Good Friday. So I would probably look to sell a deep in the money call spread for April 25th. And I'm not making this trade yet, but I'm gonna show it to you so you can kind of get the idea of what I would do. Okay, so I'm gonna sell, let's say, the 380, and as it sits right now, I'm gonna sell the 380, 395, which is right at the money. So really what I'm doing is I'm creating a synthetic put. Okay, I'm getting a $10.15 credit for that trade. Okay, I've got $15 worth of risk. So in other words, I've got $4.88 risk right now. But how do I know if I'm getting a good value or a good buy here? Well, how do I know? As I go look at the 395 put, which is what I'm creating by selling the spread, and the put selling at $12. So is it better to pay 475 or is it better to pay $12 for that trade? Okay. That's something that you want to think about. Again, being creative and understanding the different types of positions you can use instead of just straight buying stock or just straight selling stock, buying an option or just straight selling an option. If you can learn to create, then you can put these charts in your favor much more often. And they also allow you a room for error, a room for a mistake, because you can still benefit on a trade, even if you're wrong. And as we look further down the road, Meta, again, I needed to sell off further. And of course, with earnings season coming up, you want to be careful of getting too involved in earnings. There's a lot of earnings starting in the next couple of weeks. You've already had the banks. I think Netflix is Thursday. But again, it's always about where am I positioned in the chart. If I'm hovering around the mean, then I'm really not that interested in getting involved unless I have a true reason. But if you break the market down into three basic phases, okay, and the three basic phases are consolidation, breakout to the trend, and blow off. Okay. And blow off is typically the end of any move. And the blow off is FOMO on the upside and panic on the downside. And if you go back to last Wednesday, okay, we actually had a little panic in the morning, okay, and you had a sell-off here, that was the low. We were going straight down, and then suddenly out of nowhere, the buyers showed up. That happens all the time. And if you're prepared for it, and if you're prepared to use the phases of the market, then you're going to be prepared for any move without opinion. Remember, you cannot have an opinion when it comes to trading. I don't care what the news is. I'm not going to beat the tape to the news, because if Trump does something, everybody's already got it before I've gotten the information. If he makes an announcement, it's already playing in the market. So isn't it better if you learn to play it in the market? And I recommend, as you are learning how to read the charts, you start with the shorter time frames, because there's one thing about charts that is absolute. All charts are the same. All patterns repeat themselves. And a market cannot change direction until it changes in the shorter time frames. Okay. I cannot get a downtrend in a daily until I get it in a 1 minute, 4 minute, 10 minute, 20 minute. Does that make sense to everybody? A trend can't start on a daily. It has to start in the shorter time frames first. Does that make sense? Okay. So again, right now we are trending lower in the short term. Again, long term doesn't really matter right now. I'm looking at a short term chart, but if you practice and learn to recognize these patterns, you will become a much more effective trader as you go through, because you'll start to see these patterns develop on daily patterns as well. You'll see the same exact stuff happen over and over again. And I think that, again, as you walk through, I look at IWM. Once again, I'm really in a position that I have no clue where it goes to. I would assume there'd be some resistance around 190. I know there's support at 170, but is there some support at 180? Again, I don't have a high probability edge here to go ahead and jump in unless I've already got a current position. Microsoft, again, these are things I look at every day. So I'm sharing them with you. MSTR, straight dead nuts consolidation. Okay. It's pretty wide consolidation. It's a 100-point range, but that is still consolidation. It has failed to break out to either side. It has failed to develop a trend over the last month or so. Okay. And those are the things that you want to recognize. Okay. You want to look, the easiest things I can teach you in a short period of time is look for markets when they get overbought. Look to either take profits if you're in, or look for a position to get short, or when they get oversold, look to buy. Okay. And again, remember, you want to use a stop if you're taking a naked position. Now, I don't take naked positions. Okay. I'm always using some sort of a spread so that I can withstand and stay in the position forever. Okay. The ratio trade I told you about in gold. The first time I did it this year, I was in the trade for 3 months before I actually profited, because I can afford to hold it. And I know that the risk never gets too far. But it all starts with reading the chart. So when do you initiate a trade? I give you one now that I'm looking to initiate, but the options are a little bit not liquid enough right now. But I really want to sell into the euro currency. Okay. The euro currency has had a dramatic move to the upside versus the dollar to the downside. The euro currency has options. They're just not as liquid as I'd like, but I'm probably going to do that same 5x3, selling the futures in the euro currency and buying the options, because once again, we are extremely extended to the upside. Okay. And that's all I'm looking for, is conditions in the market that are favorable to me, the trader. They get overbought. That means that they're getting weighted to one side. Too many buyers. They get oversold. Too many sellers. Now, I don't know if any of you have ever been caught in a short squeeze before, but you're sitting there and you have a position on. Now, this is more of a floor story, and the market should be going lower. You're short. Everybody's short, and the markets aren't going lower. So suddenly they start to buy and start to chase them up, and that's how you get these big spikes up, or vice versa. You get the big spikes down. And I think that is something important. So if you learn to start to understand the price action and read the tape or read the chart, you will start to recognize when some of these markets are overextended in either direction. I mean, we were stone sellers of the bonds at 122. Why? Because they were very overbought. Now, again, you have to be able to sit through sometimes some pain because just because it gets to an overbought position at this moment doesn't mean that it's going to go right down. Okay. So you have to use your judgment. I go back to the shorter time frame. You can see that now in the Dow over the last hour, we've been oversold. You've had very little relief of that. You'll probably will get some sort of a bounce off of here. But again, you have to decide the time frame you're trading. Okay. And I always recommend you use two time frames, whether it's 4 minutes and 1 minute, like you're seeing here, or it's daily and an hourly. Okay. Thanks for sharing the insights of a floor trader. Good stuff. What is your opinion of natural gas? I think natural gas has probably got a chance to run down to $3. Okay. But overall, it's probably getting ready to move higher. It's a little bit oversold. You can see. I think that the 200-day moving average is down at $3, but it would not shock me. I do have a long position in nat gas right now. Okay. So I would be, but it wouldn't shock me if it came down as low as 3. Okay. But this is telling me that it is pretty oversold. Okay. So if I change this time frame just and go to a shorter time frame to see how it looks, and again, this would have been, if I were looking to add, would have been a bar I would have added on somewhere down around here. Okay. CRK, Charlie Romeo Kilo. Let me go back to a daily for you. This is kind of in the middle of nowhere. It's certainly in market theory, it's in bullish territory. And for those of you who don't know what market theory is, there's an old saying: the bulls live above the 200-day moving average, the bears live below. So it certainly looks pretty good. Okay, it's kind of mid-range. I would love to be a buyer, probably somewhere around 18 if I were going to make this trade. I probably wouldn't short a $20 stock, but I could see it going as high as 21.50 for now. And if it breaks through there, it'll be higher. Because really, if you look at it, where are we really? We're really in a range between 16 and 21, and we're really just churning back and forth. So at 18, I have no problem being a buyer. I hope that helps. Okay. I hope that gives you AR. Is that another stock or is that your initials? I'll look just in case. Okay. This is one I would very seriously consider buying right now. Okay. This is right on top of its 200-day moving average. It is at a little bit, it's not quite oversold now. It did bounce off of it. But again, if you believe in market theory, I would have no problem buying this. I'm assuming this probably has a dividend tied to it as well. I would have no problem being a buyer down here. Okay. It's on top of its 200-day. It looks pretty good. Certainly suffering down here, but held up pretty well based on the rest of the markets. So I'd have no problem looking to be a potential buyer here. Okay. But I think, again, what you want to remember, everybody, is pick your time frame, pick your trade, pick the type of trades you want to make, the style, whether it's using options or futures or a combination thereof. Because if you learn to do that, what you're really going to find out is that you can create a lot of better trades with a lot less risk and a lot less to enter. Okay. I just showed you a trade that I can enter a trade for $4.75, where if you were going to enter it just by buying the put, it would be $12, which is better. Again, it's something that you have to look at. Any hope for Pfizer? I'm not a big fan. I hate Pfizer. So I have a bias. I hate them anyways, but I'll look at it for you. Okay. I mean, listen, I'm sure it's going to bounce at some point. It is obviously dramatically oversold. It's well below. They got earnings coming out. I mean, let me put it this way. If I were going to trade it, I would not be a seller. I could only be a buyer. I hate the company. I hate what they do. I hate what they stand for. So I won't play them. I won't play them myself. But if I were, I could be a buyer only. Okay. But I like stocks that are a little bit more active as a rule. Okay. But I think, again, you've got to determine, as you're looking at your charts and you're deciding on what you want to trade, there's a lot of factors that you have to have, and you have to, well, I always give you my exact feelings. Have I ever not? You know me well enough to know. Okay. I think that you have to establish your plan. Okay. You have to learn to read the chart. And I recommend you practice on the shorter time frames because the patterns continue to repeat over and over again. Okay. So it doesn't matter. So you get to see the reaction. I just told you that I assumed we'd get a bounce in the Dow. Now, again, I'm not taking credit for this. I'm not saying we shouldn't make any money, but here, you're getting a bounce in the Dow because we were oversold. Okay. You're getting a bounce a little bit everywhere here. Okay. Here in crude, you're running right to the top of consolidation. If I wanted to trade this, I might be looking at a short. Now, I don't want to trade it, but again, none of this is a surprise to me. This is everything we just talked about happening live in front of you. You were oversold, oversold, bounce, bounce, oversold, bounce, oversold, bounce. Okay. And again, that's right now in the crude, you're getting overbought plus you're at resistance. So if I were going to make a trade, and again, this market is not active enough for me to want to trade. But if it was active enough, those would be trades I'd be looking at right now. Okay. And that's really what it always comes down to is where are we within the market? Where does it sit? Where's your edge? Where's your probability? And how do you make the best opportunity for yourself by taking also the lowest amount of risk at the same time? Anybody had any questions? Because I know I'm running close on time. This will be a record for me. I could never keep my mouth shut for 29 minutes. Okay. So again, remember, regarding PVP, I'm with you. Well, I just don't like them. Okay. I'm very upset about all this vaccine crap. But anyway, that's a story for another day. Remember to focus on the task at hand. Okay. You have to measure your risk. You have to understand where you think it can go to. For example, if I did buy Pfizer, okay, I wouldn't buy it. But if I did, I'd know that if it goes below there, I'd have to be out. Okay. I'd have to use a stop somewhere down around there. Okay. Again, you have to establish and learn to read and understand the chart. Happy belated birthday. Thank you. I appreciate it. Okay. I'm an old man now, 68. Uh, you have to continue to focus and remember better to err on defense than on offense. Who has more to lose from tariffs? China has more to lose. We can function without anybody. We have the ability to be an island. CVX. Okay, I think this is probably my last one I can do, but I will do it for you. CVX. I mean, oil is getting creamed, and I think oil is going lower. But certainly from here, I mean, I think you probably have a chance for a pop, but I would be more interested in selling a rally than buying a dip. Cold. Do I have time for one more, David?
Yeah.
This
Yeah,
is
you can do
this
one.
is ultra short natural gas. I'm not a big fan. I'm not a big fan of these big leverage ETFs. I think those are good for 5 or 6 days, and you got to be out. Thank you, everybody. David, thanks for having me. I hope I helped. I hope I did something. It's short and sweet. Thank you all. I appreciate it.